The first 2 weekends we looked at COVID, and the following week we looked at.
Hello, Biz, can you hear me?
Afande Johnson Namanya, we can hear you loud and clear. And we're beginning the presentation shortly. I hope you can hear us also. Yeah, the third week we looked at business environment, how to do this and that. And last week we looked at investment in government securities. Now the topic seems to have been wide, and most members immediately after the session requested that we should do a second one and try as much as we can to get practical. If possible, we use some figures here and there. So what we did, we mobilized the best resources from Uganda Securities Exchange. I know this is their work, which they do on a daily, so they understand these things. And we also requested them to try to localize or to try to simplify their terminologies as much as they can. I know they want to start using the per value and discount and premium. I know you're going to try as much as you can to simplify these things so that we can all understand. So we shall take it that will take them around 40 minutes, after which we'll open up for a question and answer session. And then normally at around 10:10, we officially close and then allow members to hold their unofficial chiganiro here and there. Without wasting much of your time, I'm going to request Bob Musinguzi. He's going to introduce the presenters, and straight away we shall get into their presentation. Now, today's attendance so far is at 28, but if you look at the previous weekends, we started at 50, then we shot up to 70. Last week we hit around 74. I know today some people could be still enjoying either they're enjoying Manchester or they're mourning Arsenal, whatever they are doing. But I know the numbers keep increasing, so all is well. So let me ask our presenters. No, today we are lucky to have we have our vice chairman of the NSOBA. I see him online, and I would request him, Apollo Kashanku, to just for 1 minute to say something. Apollo, I can see you online, please. 1 minute, and then we straight away go into our presentations. Thanks.
Thank you, Dixon. Just maybe to thank you and Bruce and all the OBs who are keeping this very wonderful Chiganiro going. It's very educative. I think it's all I can say is well done, and let's keep up the spirit. Thank you.
Thank you. That is our vice chairman in NSOBA. Most of you know of course, know him. And why don't I request Bob Musingu to introduce his team and straight away get into the presentation. We're just 1 minute late. Thanks, Bob.
Yes, good evening, fellow OBs, and to our organizing team. Tim, are you getting me?
Bob, we are hardly getting you. We are getting you with difficulties.
You are breaking. You are breaking. You are breaking.
Bob, your network is like Ntungamo.
And the photo is not coming well. The video is poor.
Let's give Bob 2 minutes to sort out his
Now?
gadgets. Yes.
Is my connection better now?
Yeah, it seems to be better.
Hello, Tim, is my connection better?
It seems to be better now. Yes.
Yes,
Okay,
I can
thank you.
hear you. You can hear you, I think.
Okay. Yeah, so fellow bees, thank you very much, and especially to our organizers for giving us this opportunity to share with a wider audience. We are from the exchange. We are a 3-man team, and we are with Andrew Mwima. Andrew Mwima is our manager for trading and research at the exchange. He will give you a brief bio, but at least I think what is most important is we believe he's very competent enough to share with us and guide us. Then on the call is, I believe, the only lady so far in attendance, Susan Namaganda. Susan represents one of our brokers, and she will really do some good, especially in response to some of the questions that came in after the last weekend's discussion, especially around fixed income and those things below. She will at least try to guide us with examples, but we intend to at least not use more than 30 minutes so that then we can be in position to answer your questions, your clarifications, and queries. So without much ado, I think I'll hand over to Andrew to share with us at least the introduction before Susan can get on board. So Andrew, over to you.
Thank you. Good evening, Lions of NTARE. Yes, I'm very privileged and extremely humbled to speak to you. Without going too much into detail, my name is Mr. Mwima Andrew.
Volume Andrew, maybe.
Is that better? Is that better, Chairman?
It's better now. It's better now.
Okay.
That is his volume. That is the maximum.
It's better now.
I tried to use a device thinking it would amplify, but let me speak directly to the machine. So my name is Mwima Andrew. I work at the Uganda Securities Exchange as the manager trading and research, like my brother, Mr. Musinguzi, has said, a role I've been in for the last almost 10 years. Of course, over those years, I've been able to learn a number of things which perhaps will inform most of our discussion today. That aside, I've been an active participant in the financial markets regionally for the last 17 years. I also had a stint at some pension funds for 5 years. Then at least I've invested in stocks in Uganda, Rwanda, and Kenya. With the discussion we had with Bob earlier, he mentioned you needed some demonstrations on bonds, but he asked me it would also good to share some generic information about financial markets. And that is what I will do to set the ground for Susan, who will help us understand some of those numbers, if you don't mind. Can you allow me to share a screen? Yes, So, Mr. Chairman and the rest of our people on the call, I will give that generic perspective. Then Susan will give us that focus. on the calculations on fixed income, if you don't mind. Of course, like I mentioned, the perspective I will use is more of an experienced one. If you recall in life, there are people who tell you because they have studied something in class, but then there are people sometimes who write and give you knowledge and wisdom through experience, through something they have kind of handled. So that will be my style of perspective for the day. Just to introduce financial markets as a whole, such that maybe you try to understand where these bonds and other fixed income instruments, or even stocks, come from. We shall try to understand what are capital markets and what are financial markets. So to some of you that could be highly exposed, which I believe some of you are, you could be trading some instruments. I know Ugandans are too aggressive at looking for avenues of raising money. So some of you could have interacted with screens like those. At some point, you either try to buy a currency, or you've even fumbled and tried to buy a share abroad. So that is a typical trader's screen in an advanced market, trying to buy or sell a complicated stock. For those of you that have experience, you could be familiar with charts and graphs. Some of you may not. So we shall try to be as basic as possible. This is a bit of a structure of our financial markets industry in Uganda. The central bank is a core stakeholder in our industry. Bank of Uganda borrows on behalf of our central government. Maybe if the government wants to add the doctors on this call, some money to build that road from Ntungamo to Chisoro to Tamakito, to grow it and expand it for different reasons. So we shall see why the government sometimes issues these different instruments, and also what particular instruments it issues. Then we have commercial banks, very, very essential partners. These ones, usually some of the listed companies we have commercial banks. On the other hand, like you will see subsequently, you cannot raise money through the stock market or capital markets without them. They also go far to help you to collect those proceeds and also give you advisory services. Then we have the capital markets industry, rather capital markets authority, which offers oversight in terms of regulation. Then we have the USE, the brokers, investment advisors, fund managers, custodians. All of these are extremely important. Then insurance companies and pension funds, who are very active participants in financial markets. Just to if you can observe, we cannot do without each other. In fact, according to historians, both the authority and stock market simply evolved from Bank of Uganda. They started as desks in that central bank of ours. So a stock market or stock exchange is that marketplace where different financial and investment instruments are bought and sold world over. These include shares. A share is also a stock. The bills and bonds, which are treasuries, which we are going to speak about. In some markets, commercial paper, municipal bonds, commodities, derivatives, and currencies. We could have showed you images of the USE. However, once we automated, brokers no longer come to the trading floor. So we decided to borrow an image from one of the largest and busiest financial markets, which is the Chicago mercantile exchange. The people you see in red, blue, and green are traders. Another word for trader could be a broker. Yeah, to proceed, we have a number of roles. It would not be fair for us to just start with treasury bill per value, premium, discount, without telling you why in the first place these instruments are issued. Why are bonds issued in the first place? Why are shares issued in the first place? I believe speakers before us, maybe the other weekend, Mr. Opio was speaking to you. You sometimes need to ask yourself, why would companies issue some of these collective investment schemes and mutual funds? Yeah, before I even proceed to try to make it practical, I'm like you, I didn't go to NTARE, but the environment I started in relates to you. There are generations on this call where maybe your parents, to get your education, they had to sell cows, they had to sell maize, or they had to sell milk. And at some point they could have given you that question, Mr. Mugisha, I'm aging, okay? We have grown this business and we want you to take over. But when your dad or grandparent asked you that question, you weighed yourself. Why don't I put on a suit and maybe go to town, to Kampala, and get a job other than growing this business which has fed us and educated us? Then there's that other generation among us who I want to call the survivors. Yeah, these are the people where they sent you to study hundreds of kilometers away from school, and maybe they gave you that 15,000 and didn't visit you. Through that hardship and life later, when you maybe graduated, you're working, you have a job, but you have that side business, which sometimes we call hustles. You have those small businesses. Now, why I wanted to make it a little bit practical, depending on those generations and who you are, there is that strange question you may face. How can I grow this business? Growth usually comes through the choice or answer to how will I fund this business? You're working, you have a family, that salary sometimes is not very sufficient to support your family. So you contemplate, how can I inject more capital in my business, yet at the same time supporting my family? So one of our core roles in this industry is to help institutions to raise finance or to raise capital. Extremely important. In fact, sometimes we would concentrate on this before we delve into the investment bit. This side of the coin will help us appreciate why we should. So we help institutions to raise finance. These institutions can be the government, it could be companies, large and small. Your company is as large as Airtel, as large as Stanbic, as large as Movit, well and good, but it could be small, an SME, even a micro enterprise. You can also actually raise some capital or finance through the stock exchange. So I tried to fuse in some elements of academics. If you've sat in a business class, you could have come across that interesting equation that assets are equal to liabilities and equity. You can fund your business using liabilities and equity. Since we have a little time, I will really try to accelerate. So a liability is simply a loan. It's a debt. And all these four alternatives of raising finance are limited to institutions. That's why we talked of governments, companies, and other players we shall try to relate to. So if you borrow through the capital market, so through the stock exchange, we don't call it a loan. You go to Stanbic, Standard, that debt given to you is called a loan. If it's got from the stock exchange, it's called a bond. But the rest of the features are the same. Another core distinction with bank loans, you will pay that interest every month. On the other hand, if you borrow through the stock exchange, you pay that interest, which is called a coupon, every 6 months. So you kind of pay twice a year for the period you've borrowed. Then at the end of the loan period, you return back the principal. So like we mentioned, government can borrow short-term period, it's called a treasury bill. If government borrows for a long-term period, it's called a treasury bond. Of course, there is one in between there, which we would call a treasury note, but it's kind of the same story, bills and bonds. If there are companies which are borrowing, it's what we would call a corporate bond, if it's long-term in nature, or commercial paper, if it's short-term in nature. Same feature. So if your companies are there, or if your advisors to the government, all these different players can issue some financial instruments. Then these places we come from, some of you could be working in local governments very recently in Mbarara, Mbale, Gulu, Kampala, rather Jinja, Masaka, graduated and became cities. So these cities, which could also pass for municipalities, can also issue what we call municipal bonds. Of course, they have different needs for cash. Yeah, so historically, of course, Susan will always clarify, in our republic here, the government has been issuing bonds and bills every fortnight, every 2 weeks. Perhaps it has changed, but that was the trend. So over the 20 years plus of our existence, there have been in excess of maybe 2,000 treasury bills and bonds issued by our government to achieve different objectives. And the maturities in Uganda, I believe, range from 2 to about 20 years. But Susan will give us much more of the details. Just very briefly, sometimes debt is not something easy. Even if somebody tells you, take this billion and pay me back 5% per annum, some businesses genuinely struggle to pay back. So the other side of the equation, which we call the equity, is the other alternative of raising finance, where governments, even companies, sell shares through what we call the primary market or an IPO. Unlike borrowing, where you have to pay interest and principal, with this alternative, you're not compelled. You're not compelled to pay interest and principal. So it's usually public, but it can also be private in nature. When you hear of Bob in the coming months telling you that we have an IPO, one thing you should master is that the company which is doing this IPO is actually going to get some money through equity finance. As we speak, we have 17 companies in Uganda which are floated. We have about 28 in TZ. Our brothers in Kenya, about 75, Rwanda, about 12. Other advanced markets like the USA, 5,000, the Indians have about 10,000 companies. This equity can be raised by both large enterprises and small enterprises, SMEs, if you may. Benefits of using equity: the capital is usually large. You may want millions of dollars, $30 million, your business. You go to a bank, the bank will have to do a syndicate with another bank to give you that money, but you can easily raise it as a one-off by floating some shares through the stock exchange. Business continuity, this is very important. Most listed businesses tend to last or survive longer than those that are private in nature. Then the shareholders have liquidity. You can enter and exit with ease. You've bought shares of maybe Umeme today. After 1 month, you're tired or you're hearing a lot of negative news, you can easily sell off. That's the liquidity. So it's also prestigious in some markets. Those that sell shares on public markets pay less taxes. Yeah, so in the interest of time, very quickly, bonds are things you can invest in, the same with shares. Yeah, Susan is going to really give a lot of weight to why you should invest in bonds before telling you how to even calculate. For shares, just units of ownership in companies, there are benefits you will enjoy, such as dividends. If you buy shares of Bank of Baroda, DFCU, etc., you earn some dividends. It could be once a year, it could be twice a year. Share prices appreciate in value, just like land. So these are avenues where you can plant some money in 2021. And 2022 comes after a year, that little money you put in could have grown. So it gives you that growth perspective. Then you don't need a lot of money to buy shares. With as little as 500 shillings, you're able to start, not merely buying, but you get a chance to own companies you're not able to start with very little money. A little means 10,000, 20,000 shillings. In fact, for some of you on this call who are offended with those little sums of money, you can use these shares to invest for your children. As they get ownership, that little saving you do for them can help you achieve like objectives of paying off their tuition, maybe 15 or 20 years when they reach those different stages. Shares are also collateral, which you could use to access credit from some banks, and they are very excellent tools to save, and they help you to build wealth. Yeah, ladies and gentlemen, I would have loved to go on, but perhaps you will add us some time in the near future. But with those many words, let me give Susan the remainder of the minutes to speak about fixed income. If time allows, through the Q&A, I could come back and speak a little bit more about other instruments. Thank you for listening to that introduction. Susan, over to you.
Thank you so much, Andrew. I'd like to share the screen. Andrew, if you can unshare so that I can be able to share the screen.
Yes, I actually, okay. Is that better?
Yeah, thank you so much.
Susan, before you begin your presentation,
Okay.
it has always been a culture that non-OBs and non-OGs share their videos for the first 1 minute, and then they can turn off the video. Thank you.
Hey, indeed, I don't know how you remembered. Thank you so much.
Oh my God. Okay, but my picture is there. My picture is there. I'll share at the end. Is that okay? Let me first share.
It's
my
okay.
picture is there, but I'll share at the tail end.
Thank you. Please
Okay,
proceed.
then.
Okay.
Thank you. Okay, then. Thank you so much. Members of NTARE boys, it's a first for me, and I think it's a second for me to be in a room where there are only men and I'm the only lady. Yeah, and I'm grateful and that I'm here to share with you this evening. I was invited by Bob and Andrew from the exchange. I work with Crested Capital, one of the leading brokers at the Uganda Securities Exchange. And so I'll be training you practically, because this is my day-to-day job. I head the operations at Crested Capital, but I also actively trade for our clients, fixed income, that is the government treasury bills and the bonds. And we have been doing it since 2013. Like Andrew was sharing that, that there are shares on the exchange and the stock market. So you find that the bonds were one way that we also introduced, because people used to have challenges going to the commercial banks to access them. So we thought that what would our clients need to be able to access? So we got in touch with BOU, and then we're able to start trading for them. And also to be able to mitigate the risk that is within the shares, because the shares are very good, however they are highly risky. So bonds are one way that you can hedge against the risk that's in other assets or other businesses that you may do. So I'll go straight into it. Let me share the screen. Sorry, let me make it. Are you all hearing me? I think you can now hear me. You can hear me? Hello?
Yes, please.
We can hear you.
Yes, we can.
Yeah, you can. Yes. Okay, then thank you. So we have been market leaders for the last 8 years trading fixed income. So we have a dedicated desk at our offices. We have successfully traded over 40 billion Uganda shillings, and even this year it will be much higher than that. It will increase definitely. So if you want a trusted broker to be able to execute for you, these government bonds would be happy too. So we have all traded for our clients over that much. That's the turnover. Then from December 2020, the Uganda Securities Exchange came on board, and they introduced the government securities trading. And now for anyone who buys the government securities from Bank of Uganda, they can also be reflected in their SCD account. An SCD account is called a Securities Central Depository account, just like the one held at Bank of Uganda, but this one is held at the Uganda Securities Exchange. And within that account, you can view your holdings both in the shares and what you hold in the government securities. So what happens is that the Uganda Securities Exchange mirrors what is exactly is in the BOU system in regards to a particular client. And of course, if you're an individual and you have bought bonds, you can even access them on your phone. There is an easy portal that has been developed that you can be able to access it and see all your holdings, that you have them just like you'd have your bank account where you're able to see your money and your statements. For the Easy Portal account, it reflects what is in the SCD, and you're able to see your shares and your bonds. For the companies, I believe Bob will confirm for us. I think the USC is working with the IT team, so that also, in case NTARE opens up an account, NTARE, like the signatories to the NTARE account, shall be able to view the holdings for NTARE. So it's a very good initiative. And so this is an opportunity to actively buy as many bonds as possible. So to get into what really brought us here, so what are bonds? Because this is specifically bonds. These are not treasury bills. Treasury bills are the short-term securities. Those are the 3 months, 6 months, 12-month securities. So here we are specifically looking at bonds, and bonds is anything that is above a year. So we have 2-year bonds, 3-year bonds, 5-year bonds, 10-year bonds, 15-year bonds. And for this year, actually, on our auction calendar, which I'll show you at the tail end of this discussion, we also have a 20-year bond. So if you are interested in buying government securities bonds, you have an availability of an array of years. So it may be like, for me, I don't think I can wait as high as 10 years. I can go for a 5-year bond. So you cut that period into a half, and you're able to take on a 5-year bond. So you're the one who chooses ultimately when you want to lend the government and how long you want to lend them. And definitely because these bonds already have interest on them, so you already have the government has predetermined for you what you are going to earn from these securities. And so you'll be able to earn something from them. Then they can be purchased through monthly auctions or anytime on the secondary market. Now, bonds have one auction every month, and the treasury bills are every 2 weeks. So the treasury bills have twice a month, whereas the bonds have once a month. Now, you'll find with the bonds that if last month we had a 5-year bond, which was the beginning of the financial year, we had a 5-year bond and a 20-year bond. This week, actually, we had a 3-year bond and a 15-year bond. The next month in September, we have a 2-year bond and a 10-year bond. That means if you wanted a 5-year bond, you cannot wait for the auction calendar to be like, oh, I'm going to wait until November to be able to buy the 5-year bond. So what you will do is you'll be like, Susan, can you get me the security on the secondary market? That means I'm going to go and view what the banks are selling, and then I'm going to buy, because for them they did buy at the auction, and so I'm going to look for you who is the best bank that is selling, and I'll be able to buy from the one who is the best priced bank of the day. So I'll be able to buy for you the security on the secondary market. However, if you can wait for the auction, the calendar is available. We shall share it, and you can always follow through it. For those who really want to always buy directly from BOU. But if you're not going to be able to buy directly from BOU, the secondary market is there, and which is also not a problem. The only disadvantage with it is that, for example, if we are in a place where yields are going down, the yields of those securities are going down. For example, I'll give an example. The yield of the 5-year bond the last auction last month was at 13.4%. Now you may find that you want that 5-year bond, and probably immediately after the auction, it was about 13%, 13.2%. That is where the banks were selling it. As I speak now, in this new month, they're already selling it at 12.65. That means as we go along, the yield keeps on reducing, and that means it makes the bond more expensive for you guys. So that means you always also have to make sure you take advantage of the time. I know, yes, it's better to buy from the government, but if you have missed that time slot, it's better you go to the secondary market, especially in a falling market. If it's a market that has seen rates increase, then it's better to wait out and buy directly from government. I'll be explaining that further and how it works. Then they can be priced at either par, discount, or premium. I know Dixon was saying that lingo, which I'm also going to explain as we go along. So they can be priced at either par, discount, or premium. Then their interest is paid every 6 months. So that means you expect a coupon from the government every 6 months. I'll give an example. If you bought a 3rd of April 2031 bond, that means you expect money every October and every April. So that means I have a cash flow coming, because every after 6 months, April is October. If it's October, it is April. If it's February, it's August. If it is March, it's September, like that. So you know when your timelines are there. And even the central bank, it's very clear that the date actually you're receiving the money, yeah? The 25th of November, 2021 is when you're going to receive a coupon. Now, does that mean that for me who bought yesterday or bought the other day, shall the dates be the same? Yes, the dates will be the same for the person who had bought it 5 years prior, and for the person who has bought it when now it's just left with 3 years to go. Yeah, so the dates never change. They're already locked in. The only thing that changes on a bond is its yield. The things that do not change on a bond are its coupon, the interest. It is locked in for the lifetime of the bond. The only thing that changes on the bond is the yield. That is when you're buying or selling it. Yeah, so that is it. And so I'll be explaining further. Now, the withholding tax charged by government on bond interest for those bonds that are 10 years and above, and I believe that that came with the income tax amendment of 2019. Yes, the tax law was amended, and they say that now bonds that are over 10 years shall only be charged 10% on their interest. Then any bonds that are less than 10 years will continue at the 20%. So what is government trying to do here? Government is trying to attract long-term investment from the investors that, you know what, we love you, but if you love us, you should be able to what? To hold on to us for a longer period of time, and we will give you a tax advantage. And so for those who want to take advantage of that tax benefit, you will have to buy a what? A longer bond, a 10-year bond, a 15-year bond, a 20-year bond. Anything below that, it will remain the 20%. So that's the brief highlight on what bonds are essentially in our market. A press release. So I happened to put up some of the results of the Treasury Bond, one specifically, and this one was was actually the last auction for the financial year 2020-2021. So this was the last bond auction. So it was for the 3rd of April 2031 bond, and it was for the 13th of April 2023 bond. Now, most people see these results in the newspapers and don't understand them, or they see them for us, actually, we send them to our clients because our clients get the exact rate that is given by the central bank. But we have taken time, we have been educating them, so they now know. So I also wanted to take an opportunity to educate you so that when you see these things in the newspapers, you'll not just think, oh, these are numbers, I can just bypass them, and they are just numbers. They are really, really significant for those who are going to go into this type of business, either as with NTARE or personally for yourselves. So the benchmark maturities here, what are they saying? That it's a 2-year bond and it's a 10-year bond. First of all, what you need to know is that the auction is usually, for this specific one, it was a Thursday, and it was because the 9th of June had been a public holiday. And so because that was a public holiday, that means they had to what? To shift the auction to a Thursday. But usually auctions are every Wednesday, and then the settlement date is always a Thursday. So that means with the central bank always takes on money or purchases money from the market. However, on Thursday is when they settle. What does settlement mean? Is that day if you're if you've been successful at purchasing the bond, that is the day the government of Uganda is going to take the money out of their accounts, out of our accounts on behalf of NTARE. But should it be that NTARE was unsuccessful in its bid for the bonds, then the money will remain on their account. So the government doesn't first take money, it first takes bids. It takes bids all in the ranges from 100,000 to as high as 10 billion, because the minimum amount to invest in treasury bills and bonds is 100,000. So they take different positions. So investors will take different positions. They'll bid at different prices, and government will have them. So if government comes in and says that this is the cutoff we are going to, and then that means on Thursday they come and pull the money for all those that have been successful. For those that have not been successful, your money will just remain on the account. Then as they are taking the money, then in the SCD account held at the central bank and at the USC, we will credit the securities there. The securities will be credited at the central bank, and then eventually the brokers will also submit to the USC, and those securities will reflect back to your accounts. So that means there needs to be two things that are happening. Money is going and securities are what? Are reflecting. So that is very key. Now, the 2020, if you look at the 2-year bond, the 2-year bond is maturing on the 13th of April, 2023. Now, this 2-year bond was originally a 10-year bond, by the way. So you find that it was auctioned a long time ago, but now it's left with exactly 2 years. But for the 10 years it has been running, it has only been paying 11% coupon, and it's up there, auction UG 1224 for 11%. That is the interest of that bond, and it has not changed over the life of that bond. It also goes the same for the 10-year bond. It was originally a 15-year bond. I think it was last auction, the first auction was in 2016. So you find that right now it has been paying 17% since 2016, and right now for everyone who bought it in June or who is still buying it right now, they're still going to earn 17%. So that is the guarantee already. Government is telling you that you are buying 11%, you are buying 17%. Now, what will determine where you put your money is when you next need your money. It'll be like, us as NTARE, when would we need this money? Oh, we need it in 2023. That means you cannot go for a 2031 bond. So that means you may have to compromise on a 2-year bond, or you probably feel like, oh, that is before the next general election. I think we need to have our money before the next general election. So things like that will come in. Then the cutoff price. Just like you'll go into a market or in a supermarket or a shop or wherever it is, or even to buy something on the street, you always pay a price. So you're also going to pay a price for these securities. And in our market, we have a cutoff price. Now, come the year 2018, yeah, that was 2018, the government issued through BOU, issued a statement that all the securities are going to be issued at a single price and at a single yield. That means they removed the multi-pricing or the multiple pricing in the market. Now, before 2018, you'd find that people were buying bonds at different prices and at different yields. So you'd find that the person of 300 million got like 18% yield. We are not talking about coupon, meanwhile, we are talking about yield, the inherent yield of that bond, 18%. Another one buy it at 16, another one at 14. However, because there were so many pricings, so government said, let's come up with a single pricing. What is government saying? That whether you have 100,000 or you have 10 billion Uganda shillings, guess what? You are all going to pay one price. So it doesn't mean if you're bringing the mostest of the money to be able to get the best rate. No, if government decides that this is the limit we are taking, all of you are going to take. Even the ones who would have bid lower will be raised to whatever the cutoff price has been stated. And that is why you see now on our reports, they put the cutoff price. Before, in the previous reports, you can go on the BOU website. If you check the ones of 2016, 2017, they used to put the word average. So that means they would get the average weighted price and give it to the non-competitive bidders, and the competitive bidders would get any price that they would have bid for. But right now in our market, they're saying at the price that Dixon will buy, to go and buy a banana in the market, if they say that the price is 500, that is it for all of us. Whether you come with a Range Rover, whether the person who comes on a bicycle, if the price in the market for bananas is 500, that is that. I hope that is clear. Then the YTM, which is the yield to maturity rate at cutoff price. Now that is the yield that moves in hand with the price, and it helps us to determine the price. I'll explain further in the next slides as we go ahead. So 11.5% moves hand in hand with the price of 100.880. You get it? That's what government has, but I'll show you in detail what that means. Then 13.739% moves in hand with 119.920%. So if I wanted to get the yield of this bond and I have a price, I can easily use the price to get the yield. If I have the yield, I can use the yield to be able to get the price of that bond. And it's going to help us to determine how much money NTARE is going to pay. And it's a scenario that we're going to I'm going to share with you. Offered means that what is government looking for? How much money are they taking out of this market? That they wanted 180 billion for the 2 years, and they wanted 270 billion Uganda shillings for the 10-year bond. And so how much money did they get tendered? That the market gave 499 billion, and for the other threshold, they gave 616 billion. So that means if you look at the bid to cover ratio, it means the number of times oversubscribed. That means there was a 2.7 times oversubscription, 2.2 times oversubscription, which is very, very good actually. But the thing is that means if it is good for, it's good for government, not good for investors, because the more money that the government will have, that means they can pick and choose, and that means they can offer very low rates in the market, and that means it's also bad for us investors, because they're like, oh my god, the yields are going to go lower. And actually, yes, the yields for these bonds, they did go low. That 11.5 and that 13.7, those were very low yields for those bonds, and it is because of the what? Of the tender. And what is causing actually these low yields in our market? What is causing those things to go down? I'll explain as I share much further. So competitive means what? The people that have offered over 200 million Uganda shillings, that an account, an SCD account, has come and offered more than 200 million Uganda shillings. Non-competitive means anyone who has offered less than 200 million Uganda shillings. And I think you'll see them, they are 719.5 million, 719.5 million on the 2 years and 4 billion on the what? 4.9 billion on the 10-year bond. So that means that the most of the money comes from accounts that have offered over 200 billion Uganda shillings. Now, because government is not going to say Dixon came first, that I hear Bob came first, or Andrew came first, the competitive people, whoever has offered 200 million Uganda shillings and above, is going to price themselves automatically. So that means for as we collect our clients' money and all that money is over 200 million, I am going to price. Yeah, I'm going to be like, oh my God, where are the yields now? I think this is what it could be. And then I price. I price because then the government is going to look at the different prices. And then they're going to start filling those prices according to who has given them the lowest. Yeah, the one who has given the most, because the government doesn't want to borrow at borrow at very high rates. So they'll start with whoever has been lending at very low rates, and they come fill their book. When they have reached their the money that they want, then they put a cutoff, and they're like, this is the price and the yield where we are stopping at. Any money above the rates we want, that money is automatically rejected. Now, the non-competitive bidders, for them, they don't price. They are price takers naturally. That means that for anything that will be decided by Bank of Uganda, for them, they are automatically always taken. And that is why when you go down to the accepted bids, they will show you that for them, automatically, they were filled. However, on the competitive bid, of the 498 billion, government only took 179 billion. So that means over 300 billion stayed in people's accounts, isn't it? Then 265 billion of the 611, that means over about another 400 billion remained in people's accounts. So you get what I'm saying. So you need to see, oh my God, oh, the supply this week was very high. So if you see this in the newspapers, I believe next time it should be very, very easy for you. And actually for these other prices here at the beginning, I'm going to show them how you apply them practically when you're at your desk job, or when you're at the comfort of your home, or when you're taking some coffee out there in a cafe. I'm going to show you how you easily compute for yourself how much money you're going to earn. So these are the government results, and these ones we shall always share with you, our investors, because we buy for you exactly what BOU gives us. And we're in proud partnership with the Uganda Securities Exchange, and the primary dealer we are using for these transactions is the Centenary Bank. So you don't have to worry about anything. So we shall be able to advise you and give you valuations for any investment you want. So the key terms, yeah, Dixon said, Vanai, the lingo in that market can be a bit much. Yes, it is our lingo, but it's what we use. But now you're going to start speaking like us, which is very good. So the face value or the nominal value, what is that? The face value is the future value or the amount of payout the investor expects from the government. So right now, you and I seated here, if I am deciding to buy, for example, a plot of land, I am expecting to buy that plot of land at a certain value. And that plot of land will have an inherent value. And that means should I want to sell it in the future, I know how much I will expect, isn't it? So usually all of us are starting, when you go to that land broker, you're like, what is the value of this land? What am I buying? What is the expectation when I pay my 10 million or 40 million? That is what you are buying. So the same thing applies when it comes to bonds, that when you come, you Dixon, to buy this bond in the market, you're going to buy, Susan, I want a bond that is worth 10 million Uganda shillings. That means the expected maturity, whether it's 2 years or 3 years or 5 years or 10 years, you're expecting 10 million Uganda shillings from the government, that you are buying a future value, a face value. Now, this face value can either be discounted, it can be at premium, or it can be at par. So I will explain that further as we go. So we are buying a future value, the amount that I expect back after the end of the 2 years, that nominal value, the worth of that bond, that is what we are buying. The payout that you're expecting after all the coupons have been paid, after the government has used your money. In other words, you could maybe call it like some sort of principal. That's what you're expecting back from the government. The future value, the worth of that investment. That is what is known as a nominal value or face value. Just like you'd go and be like, I bought a plot of land worth 40 million. You also can go and say, I bought a bond of the value of 40 million Uganda shillings from the government of Uganda, and this is what my expectation is. Then price, the cost an investor pays to acquire the security, that security 40 million worth. How much am I going to pay for the value of 40 million to be able to get? What is that inherent price that I am paying to buy that government bond that is worth 40 million? Yeah, what is that price that I'm paying for that land to buy that land that is worth 40 million? That is what price is about. Coupon is the interest paid out to investors, and this interest is paid out semi-annually, every 6 months. Government would have decided to pay you yearly, yeah? But they are like, yeah, it's too a bit much. It's what? It's very long. Let us shorten the period. So that means every 6 months, someone is expecting money from the government of Uganda. For treasury bills, for them, they are different. For them, you have to wait. If it's 3 months treasury bills, you wait at the end to get both the principal and the interest, and you go away. If it is 6 months, the same, because the period is assumed to be so short. So government doesn't have to be on pressure to pay you every month. However, because these people have locked in their 40 million Uganda shillings for 10 years, government is going to be like, Kale, every 6 months, I'll be giving you some money, yeah, for your what? For your investment. Then at the end of the period, I give you 40 million plus the last installment of your interest. That means if it's a 20-year bond, you're expecting 40 coupon payments. Over the life of that bond, you're expecting 40 payments from the government. If it's a 5-year bond, it's 5 times 2, you're expecting 10 payments from the government. So for every year that you have bought, you just multiply times 2, how many payments you expect from the government of Uganda. Then the coupon date is a day the bond investor receives interest. I told you these bonds are so explicit that you know exactly the date when you're receiving the money. They cannot tell you that it's in the month of November. No, it is the 25th of November. It's the 16th of October. You get it? And all those payments usually lie on a Thursday. That is, like I had explained earlier. Then the yield is the return to an investor at the time of purchase. Yeah? And the yield can be expressed as a percentage, which, and I told you that yield goes hand in hand with what? With price. So the yield helps us to determine the inherent value of that bond. It helps to determine the inherent value, like at how much, what is the cost I am buying. Then once you have bought the value, then the government goes to apply the interest, the coupon on the value that you have bought. So if it is 40 million Uganda shillings that you're expecting from the government, it has been determined by a certain yield and price that are expressed as a what? As a percentage. Then after that has been determined, then the government goes ahead to apply the what? The interest on that value that you have what? You have bought. So the yield, I kept on telling you that it can change. It does, once you have bought, for example, in the example I shared earlier, you bought a 10-year bond at 13.739%. So for you, you've rested, that is what you bought it at. However, should 5 years down the road come and NSOBA is in such an urgent need of money, they are really stuck, and actually this is the last resort, because also treasury bills and bonds are next to cash securities. They are cash convertibles. Actually, right now, if you go to a bank, I think for some of you who have walked in, the first thing they ask you if you wanted to take a loan from the bank, these days the first collateral they look for, these days the banks don't want land anymore because land has become too dangerous for them. They ask you, do you have a treasury bill or bond? Yeah, and if the moment you say yes, they don't even care about the land anymore, as long as it's the value that they want, because they know that is next to what? To cash. So that bond will be with them. Remember, the coupons are all coming through to the account. You think the bank, even though you don't pay your loan, they know that where they're going to get the what? The money. So imagine that NSOBA had an urgent need of that money. And so they wanted to sell, like, Susan Mane, we need the money, please convert. So I will go into the market. But as I am going into the market, I'm just not going to just sell at any yield. I am going to look at where NSOBA bought at 13.739%. So I'm like, oh, they bought at 13.73. So that means I have to look for a buyer that is willing to buy at low. Of course, I look at what the current general market is. So if the current general market is what it is right now, that the rates are falling, then that means NSOBA is in what? Is in luck. Because this same bond, I can be able to buy it, I can be able to sell it for them maybe at a rate of what? Of 13%. And that means they sell to another person at a higher what? At a higher yield. And then they exit the market and the other person continues on with the life of the bond. And when we are selling the yield of that bond, we are selling to recover the original cost that NSOBA spent to buy that bond. We are no longer caring about coupons because coupons are going to be taken over by someone else. We are selling that bond to recover the original cost, the original money, because now you've been enjoying these coupons for 5 years. Now I just want to recover the money that NSOBA spent and then someone else. And so that means for bonds, usually for us, for the rates, we always sell lower, because when you sell lower, you give someone someone takes on a higher price. The lower the yields, the higher the prices. And I'm going to show you how that happens. So understanding bond pricing, the discount, the par, and the premium. I've put here an example for you of a minimum of 100,000 Uganda shillings, which is what government requires us to buy. So discount, which is the treasury bills. Yeah, treasury bills are they are forever offered at a what? At a discount. For them, that's how they are priced. However, with bonds, they can go either direction. Bonds can either be a discount or par or premium. And what's that? Discount means that Dixon goes to downtown Kampala. He has with him 1 million Uganda shillings, and he wants to buy a Samsung phone. Now, the Samsung phone he has been seeing it at 1 million Uganda shillings. But when he enters the shop to buy that phone, he's told that, oh, the phone, he exactly asked for the phone that he wanted. And then they are like, oh, it's now at a discount. You can now pay 900,000 to get it. Remember, Dixon had 1 million in hand that he had come to purchase a phone worth 1 million. But he has now reached the shop and they are telling him that, you know what? The phone is at 900,000. That means he has a 10% discount. That means he has 100,000 that he's going to go back home with, isn't it? Because he's only paying 900K. And that is what the government is doing with the treasury bills and with the bonds when they are discounted. Government is saying that I am still going to give you a phone worth 100,000. However, you're only going to pay 94,000, because here I was assuming that the price is 94%. So the treasury bills and bonds have to be priced at the price of 100%. If I could go back here, you look at the cutoff price here. Here for the 2-year bond, it was 100.80. That means it had crossed over the 100% mark. So it already was going into the premium. It is already a premium here. Then the 10-year bond is 119. So it's already more by 19%. So for all, if you see a bond that has a price that is less than 100%, automatically that bond is at a discount. And that is the same thing that happens for treasury bills. Government is saying, give me 94,000. In the future, I'm going to return to you 100,000 Uganda shillings. So you pay 94K now to get 100,000. So the difference between 100,000 and 94K is your gain. That is the 6,000 Uganda shillings that you have what? That you have got as a benefit. I hope that one I am very clear. Discount means that the government, you should have paid the full price of 100, but the government is saying, no, pay 94,000. And for me, I will give you 100,000 in the future. Yeah, on the maturity date. That is what I'm going to return to you. So you pay 94K, and then Fast forward 3 months later, you get 100,000. And then that means the 6,000 is your benefit. Even both for bonds, that can happen. Now, how do you also know that a bond is a discounted bond? This yield is 11.5. However, for the 2-year bond, if you look at it, however, its coupon is 11%. How you know that a bond is, before even you look at the price, if you, for example, you were not given the price, but you were given the yield, how would you know that a bond is at a discount? When the yield is higher than the coupon. For example, if this yield was, say, 13%, automatically this bond is going to be discounted, because guess what? You are going to pay 94,000 to get 100,000 in the future. That means I have paid, then like I already told you, that the higher that yield, the higher it goes, it lessens the price or the cost that you want, that you pay to the government of what? Of Uganda. The moment the yield starts falling below the coupon rate, automatically that bond becomes a what? A premium bond. I hope that it has been understood. Now, the beauty with a treasury bond, which is not on a treasury bill. On a treasury bill, you remember you got a discount of 6,000 Uganda shilling, and that is your gain. So that means on maturity, they're going to give you your 94K plus your 6,000, but the 6,000 will be taxed 20% because they have to remove what? Withholding tax on that. So probably 20%, that is like maybe like what? 800 something. So you get whatever is the balance plus your 94,000 and you go away. However, with the bond, it's even more beautiful. Remember, the bond has been discounted. So the bond is going to have two benefits to you. A discounted bond is the best bond in the market. Now, the thing is that for it, you are going to earn that discount in the future, because remember, you're going to get that 6K gain in the future. However, also, you're going to be paid a coupon, because guess what? The government is going to apply, if you bought the 10-year bond, is now going to, after you have determined the value which you are buying, that it's 100,000 worth of this bond, then they're going to apply 17% on 100,000. And that means that is how much? 17,000 Uganda shillings. So that means you get the 6K at the end of the life of the bond, because it's discounted. That's a gain that you're getting. But even here on the journey or the life of the bond, you are getting a coupon every 6 months. That is on discount. I hope that has been understood. Then PAR. PAR means that I have gotten the price of 100. It's exact. I have brought 100,000 to, I've brought 1 million Uganda shillings to buy the Samsung shop, to buy the Samsung phone, and indeed I find it at 1 million Uganda shillings. So that means there is no benefit when it comes to their bond. There is no beneficial discount. It's just that I went to the Samsung shop, I bought the phone that I wanted at 1 million, and exactly I found it at 1 million Uganda shillings. And so that is what the government is also saying, that you get that. That means that the price is 100. So that means it's 100,000. So here the government will just go ahead to apply the 17% coupon after that. Then premium. Premium happens in our market, and premium is any price that is greater than 100, and in this case it's 119%. So you are buying a treasury bond worth 100,000 Uganda shillings. That's the maturity value in the future, the 100,000. However, they are saying that today, pay 19,000 to be able to get 100,000. Here, what am I trying to say? Yeah, you have Dixon again is in the view. He has 1 million Uganda shillings. He's saying he's going to buy the phone that he wanted at 1 million shillings. He gets to the Samsung shop and they're like, nice. Oh, money. I don't know if you've all heard, the port that is one of the biggest distributors for us in China has been hit by COVID. So they are saying that there's going to be a bit of a challenge of supply to countries that have been importing from China. So now imagine such news is coming right now. And every person who has probably been importing phones is automatically going to raise the prices, because they're like, we're not going to get any stock for the what? For the phone. So that means automatically they're going to increase the prices, because they are not going to have enough stock to what? To buy. So that means if you want the price, if you want the phone, you should be able to pay a little more extra for it. So that means now Dixon is going to get the shop, and they're like, you know what? The phone is now at 1.2 million Uganda shillings. That means he has to pay an extra 200K. So either he's going to downgrade and buy a phone that was not his expectation. Probably he now downgrades from a Samsung to an Itel. Or he will what? Or he will have the money and actually pay for the premium. So that is what happens in our government bonds, that you can pay a premium. But what causes a premium? The number one cause of a premium, or the fall in the rate below the coupon, the yield below the coupon, is liquidity. The moment there is a lot of money being supplied to the government can pick and choose at any time at what rate that they want, because they are having excess liquidity. And right now we have been experiencing excess liquidity. Since COVID began, we have seen the increase. Why? You people have money, but it's on savings accounts and fixed deposit accounts. That is number one in your banks. You're afraid to make investments, hardcore investments, because you're afraid that you're going to lose the money, and even you don't know if you're going to get the return that you want. So you're like, you know what, let me go to the bank and I fix the money in my savings account. At least let it sit there until these COVID things, these lockdowns stop, and then I can put it in a good viable investment. Yeah. And so in turn, what is the commercial bank going to do? The commercial bank is the biggest lender to the what? To the central bank. Why? Because they also have to make money. They have promised you a return on your account, and the more money you have on your savings account, the bigger the what? The interest rate that you will get. And they'll ask you, Dixon, how long are you willing to invest this money? And then you'll tell them, it's okay even for 2 years. Automatically, they're going to go and put it on a 2-year bond, because you are not willing to use that money. You've foregone its expenditure for 2 years. So the banks can go and invest it for 2 years. So there's a lot of money seated in the banks, and I think if you saw their financial statements, all of them, you saw that they had a lot of customer deposits. They had grew because no one is using the money. Then also, if you see, the biggest earner for the banks is the interest income, and that interest income is, they're not getting that interest from the clouds. They're getting that interest directly from the central bank. Number two, you people have insurance policies. Yeah, you either have unit trusts or you have life insurance policies, whereby the law in Uganda under the IRA Act, the Insurance Act, of course, the overseer is the Insurance Regulatory Authority, states that 30% of our premiums have to be invested in the government securities. So that's already another avenue for the government to get money automatically. The NSSF doesn't buy treasury bills. It's the biggest buyer of government bonds. For them, they are a player in the bond market. We have money coming in from the foreigners. My bankers, my friends that I trade with, were telling me right now Uganda, Ghana, and Egypt are being seen as the economies that are giving the highest yields. So money is coming from foreigners. As long as your market allows you to buy government bonds in Uganda, money is coming. The only country that doesn't allow is the US. So that means every other country can flow in money here to be able to what? To invest. Yeah. You people are having different, you have circles, isn't it? Now you have circles, all this money is sitting and you're all throwing it to the government if you're able to invest directly with government. So what I'm trying to say, even government, I think now they approved the 1 trillion debt from IMF at, I think, what interest, I think it was 0 interest almost. So that means they're even getting more cash. So government is swimming in cash. So if they're swimming in cash, you think that if you say, government, if you want my 1 billion, you'll buy at a yield of 18%, they'll reject you, because guess what? They have more money that they can what? They can pick from. That is the number one cause of what? Of premiums in our market. So the only thing that can see these rates go up is if we start seeing the supply reduce. When the supply reduces, then we start seeing an increment in the central bank rate. We start seeing an increment in the treasury bill rates. The moment the treasury bill rates start going up, because right now a 1 year treasury bill is just at 10.15%. So that means right now for you, if you want to lock yourself in a 1 year treasury bill, it's only at 10.1. But for you saying, I'm locking myself every year at 17%, that means you're earning over 7% higher than someone who has just bought a 1 year treasury bill. So that means you should pay a premium, because you're getting a better what? Getting a better instrument. So the moment that treasury bill rates start going up, automatically the bonds are going to go up, and then we can start seeing more discounts coming into the what? Into the market. The number 2 cause of premiums in our market is accumulated interest. But accumulated interest is a good thing for you because you'll get that money paid back. I'll give an example. If you bought this 3rd of April 2031 bond, this bond is soon paying a coupon in October, isn't it? So if it's paying a coupon in October and you buy it now, that means because government pays interest after every 182 days. So we are going to get, if you buy now, that means they are about, it's because we are left with September, we are left with 1 month, isn't it? So of the 182 days, if I maybe less by 30, we are having about 150 days of accumulated interest. So if Dixon comes to buy from me, who is exiting my bond, I am going to earn my interest for the what? For the 153 days. Because guess what? Every day that the bond is you hold the bond, whether it's Saturday or Sunday, it is making money. So that the day's movements accumulate the interest. It just does it automatically. So I will be paid I'll be paid my interest for my days that I will have accumulated. However, come April, when now I have long gone and Dixon is now the holder of my bond, government is not going to say that it was Susan who first held the bond for 153 days, and then Dixon only took it for this last 1 month, the last 30 days, that I think you should pay Susan. No. The government is going to recognize that at the time of payment, it is Dixon. So Dixon is going to earn like as if he has held the bond forever. You get it for those 182 days. So that means upon a coupon payment, you will recover that premium, especially upon the payment of the first coupon payment. That means that is when Dixon will recover that premium. So that means we can easily show you how much money is due to a premium and how much money is due to a fall in the rates. We can be able to determine that for you. So I hope that has now cleared that language of discount, par, and premium. So I wanted to take you to a live example. I put it on a PowerPoint, but I can also reflect back on an Excel spreadsheet. So the bond assumptions were, the key assumptions were that the price is 119.920. The face value, I'm using the price of the 10-year from the results. Then the face value that we are buying, because you need to know how much you're buying, 10 million. The coupon is 17. The period is 10 years. The maturity date is the 3rd of April 2031. The WHT, the withholding tax applicable on this bond, is 10%. The coupon months are April and October. And how many coupon payments are there for this bond? They are 20 payments because it's a 10-year bond.
Susan.
So, yes?
Susan, Dixon here.
Yes, Dixon.
I know this is the part which we have been waiting for.
Yes.
Yeah, so yeah, guys are now getting back. This is the part we have been waiting for. Thank you very much. You can proceed.
Okay, Kali. So the funds invested. So we are going to get, because the 10 million is the value that we are going to buy. So it's going to be the 10 million times the 119, because we want to now determine how much Bank of Uganda is going to take. So for that 10 million times 119.920%, government is going to take 11 million Uganda shillings, 11,992,000 Uganda shillings for you to buy a bond of 10 million. That means your premium for this particular bond is 1,992,000. Because remember, you're paying in excess of what? You're paying in excess of what? Of 1 million. It's a premium bond. So to be able to have your face value coming back, or the principal or the nominal of 10 million, you're going to buy at 11,992,000. Of course, our commission that I had left it in, that is 12,500 of the face value. So 119.92 plus the commission would be 12,004,500. Now the interest earned annually would be 10 million. Now the face value or the nominal that we have bought from the government would be the 10 million Uganda shillings times the 17%, because now we have already determined the worth of the bond. We have already paid 11.992. So that means a bond of 10 million Uganda shilling now sits in the account. Now government is going to apply 17% on that 10 million that is seated worth of that security. Annually, it's going to be 1.7 million Uganda shillings. 1.7 million Uganda shillings after tax is 170,000. So 1.7 million minus 170,000, that is 1.53 as the net interest annually. The 1.53, I divide it by 2 because they pay semi-annually. That means semi-annually, after tax, you should be able to receive 765,000 Uganda shillings in your account. Now remember, there are how many payments? There are 20 payments. Times 20, that is 15.3 million Uganda shillings. So this 15.3 million is interest alone. It's different from the 10 million Uganda shillings. So this bond together, the entire worth can be 25.3 million Uganda shillings. The only difference here is that this 15 million is going to be earned over time. Then the 10 million will be given to you back at the end of the life, that is on the 3rd of April 2031, and it will be given to you with the last installment of interest of 765,000. I don't know if that is clear for the team. Is that clear, Dixon? So that means if you see the treasury bill results, those auction results, quickly just get the price and multiply times the face value. The face value is always in the multiples of 100,000. So if you can be like, I want to buy a bond worth 11.1 million Uganda shillings. So you just get the worth that you want to buy times the price to know how much you're going to pay the government, isn't it? So it will be able to see, oh, I'm paying a premium. It will quickly also show you that I'm paying a discount. Is that okay?
Very okay.
Would you need the Excel further?
Yeah,
or you don't need that?
We don't need, okay. We need it.
Okay.
Sorry.
Okay. Okay, now let me just share back this. So I think you can see that. So if I don't know, what assumption would you want, Dixon? Like, which other bond would you want? Maybe I do like the latest 15-year bond. I don't know which one would you prefer. I think the latest one was 11. It's yesterday, the one that auctioned. It matures on November 8th, 2035. 2035. It pays a coupon of 16.620. Sorry, 625. It's 6,250. Sorry, 6,250. Then the yield for it, so it was very low. I think it was 14 point something. So today is the 8th of August, 2021. Sorry. I assume how much money, Dixon? To Dixon, how much money? Dixon, how much money should I use?
100 million.
I assume 100 million, eh?
Yeah.
So assuming 100 million, as the face value, as the deposit, as 100 million as what you're going to buy.
As deposit, so, me, I have my 100
as the face
million.
value.
Yeah.
So as the face, okay. If it is as the deposit that you have on your account, 100 million. So automatically, if I put 100 million as the deposit and 100 million as the nominal value, it automatically tells me that Dixon doesn't have enough money to buy this bond on his account. He has a negative balance of 17 million Uganda shillings. So what I will do, I'll adjust that to 80 million for me, who's the advisor, as I am going to buy. So I reduce it up to 80 million and it becomes 86 million Uganda shillings. That still gives me a negative. So it's 85 million. So it's 85 million, the premium the face value I am going to buy. So that means Dixon is spending a premium of 14 million Uganda shillings. Because remember, he's paying 840 shillings to the government of Uganda to get 85 million point two at the end of the life of the bond. So his face value, the value that he has bought, is worth 85.2. So that means he has a premium of 14 million. That means it's a huge premium. Now, from you look at this, the cash flows are the debts, the cash flows are 85.2 million. They're going to times, they're going to the 16.2. So that means annually Dixon is going to earn 13.8 million Uganda shillings. So after the government has determined how much she's going to have, 13.8. However, they say every 6 months, that's how you will earn. This is when you will earn. So that means they divide it by 2. That is 6.922. Now here in my formulas, I need to change the tax because the tax for this particular bond is 10%. So after tax, the 6.9 million times 10%. That means, hold on, times 90%. Times 90%. That means it gives me the 6.230250. And that means every 6 months, Dixon is going to what? Is going to earn, every 6 months is going to earn 6.2 million Uganda shillings. And government has said that for the life of this bond, he has 29 payments that are coming for him, and they are beginning on the 25th of November. So that means I am going to definitely change it here. The total coupons that I will have will be 29. That means interest alone coming to Dixon is 180 million Uganda shillings. When I add the nominal value or the net maturity value, it is 85.2 million Uganda shillings. The total gains is 265. That means the summation of this, 265 million Uganda shillings. However, if I want to give the actual cost, the total gain, the actual gain of what? Of Dixon, it will be 165 million. Remember, he had a premium of 14 million Uganda shillings. 14 million Uganda shillings. And for this particular bond, what I wanted to show you is when you have 182 days, they have told us that from today to 25th of November, when it will pay the next coupon, 79 days that have so far accumulated interest. And this particular bond accumulates daily interest of 35 shillings every day for Dixon. So for the 79 days times the daily interest earned, that means that is 3 million Uganda shillings. So that means of this 14 million Uganda shilling premium, only 3 million Uganda shillings, is as a result of accumulated interest. And this money Dixon will get back on the 25th of November, because when he's paid, he'll not be paid for the 103 days. He'll be paid for the 182 days. That means the balance of the money that is left, which is 14 million the balance that is left from the 14 million, that means 11 million is as a result of the drop in the rate. So when does Dixon break even? Actually, Dixon will break even in the first 2 coupons, because the first coupon gives 6 million. So by the second coupon of 26th of May 2022, that is when Dixon will have broken even, and he will have recovered fully. And that means of the 29 coupons that are left, 29, 28, that means he has 27 coupons that he is left to what? To enjoy. So that means a premium isn't all that bad, because at the end of the day, this bond returns to you 165% of the money you invested. This 15-year bond returns to you 165.97% of the money invested. You invested 99 million to get 85 million. However, for the investment that you made of 99 million, you're getting 100 and what? 180 million. Of course, after the premium, it's 100 and what? 165 million Uganda shillings. So I think this is still a very good and viable investment that anyone can take on. For those who have children that are in school, that are studying, and that you'd want to now project for them cash flows, like how school fees for them in the near future, it is very easy. We have seen most of our clients come, tell you, Susan, I want an investment where I get $10,000 every year. Yeah, I just need school fees for the children. So you're able to evaluate for them the bond, especially the seniors who are now selling off property to get into more manageable living, condos and everything. So they would sell off their bigger property so that they have a cash flow that is taking care of them. I always tell clients, this is your mini NSSF. You don't need to wait for your NSSF to come. You can start building it and creating it, because the same thing that the unit trusts are doing, the NSSF is doing, you might as well also do it for yourself. You can have as many bonds as you want. The government cannot say that, Dixon, you've bought too much. No, you can have as many as you want. And usually what I would advise clients, if you have a bond that is April and October, you get another one that is February and August, then you get another one which is March and September. So you find that every month you start having a cash flow, which is very nice. Yeah. So the calendar is this. It's not clear, but I believe Andrew and Bob can share at the end of the discussion the real original calendar, or even I can attach for you here in your group and you download it. If you look at our calendar this year for financial year 2021-2022, you will see that the government wants us to invest long term, because they're like, you know what, the money maturing in the short term is too much. So they are pushing us after the next election year, which is 2027, after the next election year in 2026. The 10-year bond is 2032. The 15-year bond is 2035. The 20-year bond is 2040. And these bonds are going to be reopened. These are reopened bonds. They are bonds that are already existing. People already have them. The government has already auctioned them, but the government chooses to reopen them so that people can take more of them. Then if you look at the 2-year space, they're saying new 7th September 2023. So government is saying that they are issuing a new bond come next month, and it's for 2 years. And that bond has already they've already determined its maturity date. It matures on the 7th of September 2023. However, it does not have a coupon and it does not have a yield. All those two things will be determined next month. And once the coupon has been determined, that coupon will be fixed over the life of that bond. Now, what are our projections? Of April 2023 bond is at what? Is at 11%. I don't think government is going to offer a coupon that is greater than 13%, because even we already have bonds of 2024 that are at 14%. So we don't expect government to give a coupon that is greater than 13%. But they can shock us, but I don't think it will happen. So you can, if you want to try and be like, let me go there as a blind man and get whatever I will get, or you can choose to wait until December, and then that's where now you see in December they will now call it a reopen, because already it has a predetermined coupon. I want to thank you. I know I've taken a lot of time, but it's better I take this time other than people saying I didn't understand. She was so fast. I'd rather that you understand. So I'm apologizing to Bob and Andrew and the team of NTARE. Sorry for taking much of your time, but that is me. I am a teacher, and yeah, that's what I like to do. Yeah.
Susan, thank you very much. Susan, thank you very much. Namaganda say that's Ochikuye. However, we have two issues here. You mentioned my name 103 times. I was counting, and that one already has brought me trouble.
The what?
You mentioned the name Dixon 102 times, and that one has brought me trouble.
Sorry.
It's okay. Then now, of course, normally we don't go beyond 7:10. We're already 30 minutes into our added time, but I see the number of participants is still up, 54. At one time it reached 60. Now, we're going to open up for people who want to ask here and there, but I already picked some questions which I'll request you to note down so that you can answer at once. Now, the first one here, most people are asking about, are these bonds transferable? What happens if I've bought my bonds and I die? What happens? Then two, what happens if I've bought bonds for, let's say, 10 years and midway I need to withdraw I need to cancel or withdraw my bond. I need cash now. What happens? How do I get that cash? Whether is it called canceling or withdraw, something like that. Then another one is saying that a few months ago, there was something in the newspapers where they were saying that the government had failed to pay blah, 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 blah. Did it mean that actually government was failing to pay the interest or the principal? And what exactly, how had they failed to pay? Because it came out a few months ago and we didn't understand where they had actually failed to pay. Then under what circumstances will I be paid less than what I used to purchase these securities at the end of the tenure? Or does that happen that I used 100 million, but after my 10 or 15 years, I am actually going to be paid my principal of not 100, but less than 100? Under what circumstances does that come in? Then the PowerPoint presentation where you brought us that live example looked to be very simple, but then again, somehow when you got into the Excel, things looked complex with nominal and yield to maturity, blah, 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 blah. For us, the issue was, I have my 100 million, I want to do it over 5 or 2 or 3 years, mfuna maker, that's all we needed. The other Excel seemed complex, but members are requesting that you help us share the PowerPoint and the Excel. And that one I can guarantee that we're going to have it immediately we close this session. Then the next one, does it mean that at a discount is much better than the other two options, better than the per value and the premium? From the example you gave, does it mean that at a discount is the much better option? Then the last one is, okay, the last one is about of course, someone was asking, where did you study these things from? It's okay, you don't need to tell us. And maybe some correction here as the last one. It was saying that the word is NSOBA, not NSOBA, but NSOBA, it's a B. The B is pronounced as B, not, it is NSOBA, NTARE School Old Boys Association. And then of course that NTARE is NTARE, R-E, not RE, R-W-E. But it's okay. Now from the chat side, let me pick a few questions and add them to you.
Maybe let us answer these ones.
Oh,
because
okay.
There are too many.
There are too many. Most of them. Are you going to answer NTARE and NTARE? That was the question.
Okay. I hope I will be able to remember, but let me try to list the ones that you've so far given, then we can go to the next one.
Okay. Okay. Let me also, as you answer those, I'll be picking the others from the chat side. Thank you.
Okay, thank you to Dixon. So now the what you need to know about the bonds, that what is the best scenario? The best scenario is always to buy a bond that is discounted. That is the best, because you earn both ways. You earn by paying less to get more at the end, isn't it? And then you also go ahead to earn the coupons that will be applied on that more that you have received. However, in other words, that means I pay 94 million Uganda shillings to get 100 million. Then that means I have gotten a discount of 6 million Uganda shillings, which is a benefit to you. And then the government will go ahead to also apply the coupon of 17% on the 100 million. And that means you benefit both ways, on the discount by paying less and also on the coupons. However, the thing is that the government is not going to say that today it's a discount market or today is a day for discount. No. The discount market is determined by market forces of demand and supply, just like in any market, whether it's a market selling chicken or a market selling coffee or a market selling shares or a market selling property. It is all the same thing. It's market forces of demand and supply. So right now, like I already shared with you, I have told you that right now government has a lot of supply of money. And because government has a lot of supply of money, yeah, that means it's going to be difficult for them to give you, to pay you a high, to buy from you your money at a high yield. They will try to buy from you at the lowest yield as much as possible. Because when they're buying from you at the lowest yield, you are paying in turn a very, very high price. And that is where the premium pricing comes in, isn't it? And so the only thing is right now, you just have to take advantage of the opportunity. When I took you to the Excel spreadsheet, which I also didn't want to share with you, but I thought you'd have wanted to see, the thing is that I showed you that you need to see how much is how big of the premium am I paying? Like in that example, I showed you that Dixon is going to pay 99 million to get 85.2 million at the end of the life of that bond. However, Dixon is paying 14 million, 3 million, which is as a result of accumulated interest, 11 million as a result of the drop in the rate. So that means if Dixon doesn't break even in the first two coupons, then he shouldn't take part of that bond. So he breaks even in the first two coupons, then he has 27 coupons to enjoy. I don't think that is a bad bond. And that is why we are here as brokers to advise. Usually, when our clients come to us, we don't just show them one. Usually, we'll do those Excel things that I've shown as we are sending to them. We also break down what the valuation means, so that the client can see on the 3-year bond, this is what I'll get. On the 5-year, on the 10-year bond, so that the client can be able to make a decision. The beauty that this is one investment where you can calculate your return before you place your money. Yeah. Is that even with land, you may buy today land, but you don't know the return. You're just saying, I think it will have grown 20% in 2 years, but you're not sure of the 20%. However, for this one, if it is 20 million, you know how much you're even going to get back over the life of that of that security. I think that is to answer 2 questions, whereby one was saying, is it better premium or the other thing? Then if someone dies, right now, the accounts that we settle back directly into your into your bank account, where the one held with the Uganda Securities Exchange. That is why we pay back the maturities and the coupons. And usually we alert clients 2 weeks prior to the maturity that money is coming back next week. Please prepare. Do you want to reinvest, or do you want to be paid? And then you will select one of the options. Now, the thing is that I know in Uganda, maybe not even just Uganda, but African culture, usually we don't write wills. We don't even tell our loved ones of property that we have out there. Now, you need to know that shares and these treasury bills and bonds are intangible securities. They cannot be touched, they cannot be felt, they are invisible. So that means if you do not alert a member of the family that, by the way, I have these investments, this is the money that comes up on this account, someone you'd want to be a beneficiary to these items, it is very important if your will is stated. But however, the Capital Markets Authority has come out to tell us to take next of kin details. But next of kin is not the ultimate beneficiary. It just says the person we can call in the event we cannot get a hold of Dixon. However, we also shouldn't wait. You can talk to your members of the family, the one you trust the most, or a lawyer or something. These things are put because the money will show up. We shall call usually for treasury bills, even when people are not sending back responses. We call and like, hey, you're not, what is happening? Aren't you investing your money? Don't you want to be paid? If people have taken a bit of time to respond, usually even a week after the maturity has come. So yes, in as much as we should be forward looking to ensure that we are alerting Dixon and everything, the securities will be there, they'll be intact. The USE together with the broker will transfer those securities to whom the ultimate beneficiaries are, and that is after the family has produced a letters of administration that this is actually the person that certified letters of administration from a judge that actually this is the ultimate beneficiary of those securities. We create the account and the USE will move the securities and that person can continue enjoying those things that you will have left for them. I always encourage people, please write the wills, inform someone, because we have seen some clients, they died a long time ago, their shares are there, but they never alerted anyone, and unfortunately we cannot do anything about it. We have to just wait for these people to come. Yeah, so that happens. Then I don't know, another question, Dixon? It was there.
Okay. Maybe Susan, there was something Dixon had raised. I think I can answer as maybe you're confirming what else is there. It was in regards to government's inability or supposed inability to pay loans. No, what happened December, January, the government did a bond consolidation. So government through Bank of Uganda changed the policy. Previously, we had close to like 55 bonds running concurrently. So I think somebody in the wisdom from the government side said, why do we need all these? Some are maturing this date, some are like this. So they chose the government policy was to reduce them to about 20 bonds. So what they did, a number of, I think the one was a 5-year, another one was a 7-year. So they issued new bonds at the end of last year in November, and in January, they consolidated or got about 3 or 4 and added them onto those new bonds. So it wasn't that government failed to pay, it's just that it was consolidating its debt for actually easier payment and tracking, but also in line with government policy of fewer running. And that's why you had Susan talking about reopen, meaning they have one huge bond and it can always be reopened and it's easier to track and pay. So it was more of a round housekeeping issue than the inability to pay. At least what I can assure our members is, in terms of ratings, our government bonds are among the most highly rated bonds worldwide, both in terms of returns and payment. So as is, you're safe investing in Ugandan bonds, but government has never failed to pay.
Okay, thank you. We just have about 5 minutes to close this. So let me read this for you, Susan and Andrew, I think. What happens if I need my cash? Do I withdraw? Do I get my cash? Do I cancel? You had actually missed that question. Then the next one, what is the added value?
Maybe we answer one at a time.
Oh, okay.
Is it okay if I answer one at a time?
They're on refer.
Quickly.
They're on refer, so
Okay.
that you answer at once and we close. I hope that's okay. Then the next one is, what is the added value of working through a broker like Crested Capital versus a commercial bank like StanChart or Stanbic? Then the second last one, can bonds be done in foreign currency or strictly UGX? And then the last one, Do these things of bonds and bills consider inflation? What if the rate of inflation is higher than the coupon rate in the next 3, 4, 5, 7, 15 years? Would I not have made a loss? And that is the last question from me. You can answer those and we shall see how we proceed. It's coming to 8.
Okay, then. Thank you so much again, Dixon. So if you want to exit the bond, it's very easy. Get in touch with your broker or your bank. But in this case, I'm advocating for broker. Get in touch with them and tell them, I have this security, I want to sell. So they will go into the market and look for a buyer. Now, for us in our market, how it works, and I believe Andrew and Bob are my bosses here from the exchange, we do not execute any bonds or treasury bills without client instructions. So we shall come back to you that this is where you bought, this is how much we are getting out of the bond. Should we proceed to sell? Once you say that, please proceed to sell, we go ahead and sell. The moment we have agreed on the price, it is it's a very liquid market. The banks buy, usually the settlement is on that very day or T+1 the next day. That means that today, if I sell, tomorrow I can have the money and quickly pay you. So it's very easy to exit. The only challenge that would be is that maybe if the yield is not in your favor, the rate at which we are going to sell, if it's not in your favor, you may want to reconsider. So that we shall always discuss when the time comes. The treasury bill rate, the bonds and government bonds are the risk-free securities. However, the moment you want to liquidate them, then you invite risk into them. Number 2, is a bank and broker who is better? I would say, I'm speaking on behalf of the Uganda Securities Exchange, we are better. Number 1, we have taken time to advise you. We are going to show you the bonds that are available on the market. Then the thing is that the brokers have a view of the entire market. They are looking at what they have within their brokerage houses, but they're also looking at what the different banks are holding. For example, if you were trading with StanChart, that means you can only take what StanChart gives you. However, if I'm going to trade for you in the secondary market, I'll look at what StanChart is offering. That bond, Stanbic is showing me every morning, Absa is showing us every morning, Centenary Bank, and then I look for the one who is selling it at the best yield. So the broker then becomes the best option because they have the entire view of the market. And the broker is not biased to ensuring that your money is invested. The banks, remember, have to strike a balance of having liquidity and also investment. That means if every client of the bank is buying government securities and treasury bills and bonds, you think, where are they going to get the money to make money? It is not possible. That means these securities will be advertised to the people that they think have the net worth, isn't it? Or to the people who have now said, I'm taking the money to the Uganda Securities Exchange. That's the only time they will offer because they don't want the money to leave the bank. So I'll leave it at that. Number 3 is the value of the money, inflation. Yes, inflation can really affect these things, and that is true. I think you saw the case with what happened with Greece, and Greece actually had to suspend payments for the bonds that they had because people would go and get the exact money that they were promised, but when they come to the market, they have to take wheelbarrows of money to buy goods and services, isn't it? So you find that, the government will always try to issue these bonds and will always try to factor in the risk, the inflation rate and all these things and give rates that are above these inflation rates so that you do not lose the value of the money. However, how you have been promised to earn that money is how you receive it. The only challenge is that if I was able to buy a set of chairs, 1 million Uganda shillings today, in the next 5 years, will I be able to use the same 1 million Uganda shillings to buy a set of chairs? That's a very key question. That means we have to keep watch of whatever is happening with the central bank and how they are monitoring rates. That's why you see every month there is that monetary policy statement that they release to show you how the government securities and the loan interest, everything, how those rates are matching up to their government securities. Yes, it's very, very important. It's very key. but you just have to keep watch. If you see that you're losing the value, quickly sell out and leave that bond immediately and hold the money or reinvest in one that would be better. Yeah, I don't know if there's another there was a fourth question.
Yeah, I think so that I can take that. The last one was, are they only issued in Uganda shillings? So the answer is, most times governments issue debt in local currency because they intend to spend it in local currency. But there are exceptions for what they normally call Euro bonds. It means these cross currency. A country like Uganda wants to borrow in dollars or in euros or in Chinese yuan or whatever currency. Though studies have shown they are really dangerous for the borrowers, and I think our governor has said that's something he's not going to do in his term or tenure, but it can happen. I think Kenya and Rwanda currently have some running adversely, but I think those were their decisions. So yes, it can be done in foreign currency, but general practice is in the local currency.
Thank you, Bob. We are coming to a close. We just have, I'm going to request Susan to give us her parting shots. And then no, the first presenter was Mwima to give us his parting shots. Then Susan, also 1 minute. Then Bob, another 1 minute. And then we shall ask Senior Mark, I see him online, another 1 minute. Senior Mark is ours, Mark. And then Afande Johnson Namanya will close the show. Thank you. So Susan first, then Mwima, then Bob.
Thank you for having us, Dixon, and the entire NTARE team, as well as the USE for inviting us. That is Bob and Andrew for this presentation. I hope I have been able to pass on very valuable knowledge to all of you. My advice would be is that, yeah, we have very many things that we'd like to do as Ugandans, and mostly it is land. And everyone who's the first thing to run to ngenda kuzimba nyumba z'abapangisa, I know that is our language. However, we need to make sure that we diversify, because we have seen that very many people can be cash poor but asset rich. And right now, our assets are of no value. I think if you saw the newspapers last week, is that a lot of court bailiffs are stuck with properties that they cannot sell because no one is buying. That means there's a flood of property out there. So that means if you don't have anything that is giving you a cash flow to make you stay afloat in hard times, then it's going to be very hard for you to maneuver. And that is why you have on a monthly basis, you need to balance your investments between liquid investments and non-liquid investments, so that in a time as this, you have those treasury bills and bonds. Some of you have children who are of growing age, almost going to campus and everything. You need to start planning for them. These cash flows will help them in the future. For those that have already had children that have finished studying, you need a cash flow for your retirement. I mean, 6 million Uganda shillings every 6 months. If you divided it every month, that means it's 1 million Uganda shillings. That means you find that you and your wife, you can pay for your fuel and for your food in your retirement, and for some few medical bills here and there, to be able to manage your retirement. The thing that is now making very many people struggle is that they do not have these things set. And you find that in retirement, we are still dependent on the children to help us in certain circumstances. Children are unable to finish school or do the things that they want to do because the parents were unable to properly plan. And so you have so much property, land and everything, but it's not even yielding a cash flow to you. A person who has a bond will earn a cash flow regardless of whether the government is working or not, isn't it? Because even though the government changes to people power, guess what? People power will have that debt and they'll have to pay it up. But however, you can have your array of apartments, and guess what? You have no tenant. That means you have no cash flow. And we have seen that buildings, the moment they don't have anyone, they start to get spoiled and everything and have these damages. And so it is of no use to you. You're losing money actually. So for me, I would advise balance those investments. People are on the golf course, not because they have a lot of money, but they made such plans. They can go and go to the best hotels and go for the best vacations because they have bonds seated in the government of Uganda and they are earning as much cash flow. And guess what? When the bond matures, they can easily take it back. It's like going back to buy another plot of land, which will give you another fixed cash flow. So thank you for listening to me. Yeah, and I pray that all will be well and you will plan well and be available for any help. Thank you so much, Dixon and the entire team. Yeah.
Wima.
Yes, Dixon, apologies. I think for me, I mentioned your name twice out of Susan's 100 and that
now.
plus
117.
Yes, I'm extremely humbled to have got the privilege to briefly share with you guys, my brothers for sure. It's something we don't take lightly. And like Susan hinted, when you talk about diversification, it means that the financial markets are evolving. So I request that perhaps we keep our interactions frequent. There are many developments, and just in case Bob or me or even Susan get in touch with you over a new instrument coming on the market, don't be surprised. That's why I try to balance the boat and have that larger and broader picture. So like Susan has said, it's extremely important to have some investment everywhere. In addition to diversification, like you've rightly done, it's important to speak to advisors. Some of us may look a little bit thin or a little bit, but the experiences different financial firms go through, the advisors who devote all their time at offices trying to use microscopes to look at which vehicle can give you a better return, can take you a long way. Yeah, so get advice, which is usually free of charge, because you cannot be a master at everything. And one general lesson from financial markets is to have a long-term perspective. Sometimes with bonds, okay, there's that sure deal, but there are these other instruments where if you have that mentality, I put in today, I want Kagwirao tomorrow, you may sometimes be surprised. Yet at the end of the day, if this instrument gives you a nice return after a year, another after 2 years, it will still make you a better person. So thank you very much. We look forward to interacting with you more.
Okay, Bob, another 1 minute for you.
Okay, Dixon, thank you. I think in line with Andrew, for me, I'm really humbled to have this opportunity, to especially share a platform with a gentleman he normally refers to, Senior Mark. Mark was one of my lecturers that started me on this journey. So really, I'm really humbled. And two, I'm on the group. So for us who have other groups, I saw Dr. requesting, so we can always arrange this at no cost to anybody. It's something we do both as a job, but more importantly, as a passion. It is something we believe in, it works, so we are always ready and willing. So I'm on the group, this I can always be accessed. Then I think the last one is feel free to contact us, and we will always be ready and willing to support. I think Dr. Arthur, Dr. Arthur, interestingly, was my roommate in Baguta. So anytime, feel free, you can at least reach out to me and we clarify. I think I saw a last query coming. So doctor, feel free, we can always support and assist. So with those, please, anytime you want us back, we are ready and willing. And all the best. Let's start now. We say Janet starts with the first step. So people feel free, start now. We are ready and willing to support.
Thank you, Bob.
Thank you.
Thank you, Bob. As we wait for Senior Mark to unmute, Susan, you are supposed to switch on your video. As Senior Mark invites for us, Afande Johnson Namanya to close the day.
Dixon, I want to protect my member and say I can be reached for those photos. Otherwise, she might not manage demand and she might start applying premium. Those things people were not happy with.
Senior Mark, please.
Yes, Dixon. First of all, I would like to extend my vote of thanks to you and your team who keep on organizing these very resourceful Viganiro every Saturday. Today's, as I told you, was above the bar. We have learned a lot, and it has answered that very pressing question about other areas we can invest in where there is less hassle. For example, in Uganda, we have this thing of investing in mizigos and rentals and the houses and the malls, and you're running around with the tenants, you're running around with URA, you're running around with the KCCA. But this discussion has really calmed us that there are other ways we can invest, especially as we are tending towards our retirement age, where you can have some cash flow while you have the large chunk of money which you can bequeath to your loved ones. I think I don't have much more to say, but also to thank the resource persons, Susan, Andrew, and my student Bob. This has been very good. We hope other questions will come up and will be passed through my young man Bob, and he will get us the required answers, especially the yield to maturity, which seems not to have sunk in very well for many of us. Let me take this opportunity to invite Afande to come and do the final remarks, and we call it a night. Thank you, Dixon. Thank you, Bruce.
Thank you, Mark.
Thank you, Mark. Thank you. Thank you, everyone. Can you hear me, members?
We can hear you, sir.
And see you also.
Thank you. Thank you so much. Thank you. Yeah, you can see me. Thank you, Dixon. Thank you, members. Thank you, everybody who organized this. And thank you to the presenters for this very useful information. I missed the last ones, but I made it a point to attend this. And I've seen a long-time friends, the classmates, some of them whose nicknames I cannot mention here. The nicknames are interesting to NTARE OBs, as you know. But let's continue with this. My key takeaway from this discussion is to diversify the investments, but most especially this particular topic is very, very useful because it's very safe as we slow down in our lives on what we do. The higher the risk, the more the profit. But that can only work when you are in very prime. When you reach the peak and you start slowing down, as they say, landing, when you approach, then you have to be a bit careful so that you have a safe landing at the end of it all. And it's most important to have the long view of things in life, especially in planning terms, like bonds, like forests, like land, especially secure if you are searched. So I think this has come timely, members, and we really appreciate. And I appeal to OBs so that we continue with this and including, this is very good, but if you can also, away from business, if you can diversify and do health as well, so that we do all sectors. What do I mean health? We normally, this is an issue for us on the continent. We go to the clinics or to the hospital when we feel sick. And at times, by that time, you find that something that could have been arrested before, maybe it has escaped already. So if we can get doctors on the forum, and also they carry us through, including the use of annual medical checks, that would be very, very useful, because you can only do these things when we are alive. I also appreciate the other initiative of the OB Solidarity on those who have lost their loved ones, the contributions, like last month, I was one of the people when we lost our other OB, Tom Muzora. Thank you so much, members. I look forward to more. I promise myself that wherever I will be, I'll try and log on, because these are very useful. They also help us to link with the old OBs and also the new ones, and across, so that we have a linking dot, linking all the dots from the very old to the new ones. Thank you so much, and may you all be blessed. Thank you.
Thank you, Afande. Thank you for those closing remarks. For emphasis, the first 2 weekends, we actually looked at COVID. Definitely we'll get back to the health issues later. Now, next weekend, we are switching to the next 2 weekends. We're going to look at real estate and the issues around real estate, land, houses, and what. And specifically, the presenters are guys who have been big in real estate. One of them, either next week or the other weekend, at least we have talked to our senior OB, Kenneth, your roommate and Afande's roommate and Afande's classmate, Kenneth Kijuka at National Housing, he has agreed, he's going to present on one of the sessions, most likely the one of 28th, to take us through the housing sector and real estate in Uganda. And like we had promised, we're going to do this every Saturday at 6, normally 6 to 7 or 6 to 8, for the next many Saturdays until COVID is over. When COVID is gone, then that's when we shall stop. I know the football season has begun, but it's okay. 1.5 hours football, you can even catch up with football and watch a replay just 1 hour later. We already share the recordings and we share them the same night. So around 10:30, 11, we're going to share the link to the recording. We're going to share the presentations, the 2 PowerPoints, and all the contacts. We always share them. Now, I hope, Bruce, you're still there. Bruce is our PRO and Alumni Affairs Coordinator. There are people normally who keep saying they're not on this WhatsApp group. There are many WhatsApp groups. So when you contact us, we try as much as we can to add you on one of them so that you don't miss out on such good info. Otherwise, we are officially, we close the session, but we are not ending the session. For recording purposes, the session is ended. However, we are still online. We are still online for our usual chiganiro. When we haven't seen Johnson for a very long time, yet we know he's a man in charge of passports and no one is complaining. We really need to have a one-on-one offline but online. So guys, the session is open. Those who want to leave can leave, and those who are here are still here.
May I have an addition, a small addition? Actually, not small, but somehow big. 3 votes of appreciation. The first one is to Afande, to thank him so much for being here, and everyone. I see very many people who are part of the groups who have attended. I can't mention all your names, but it's a wonderful opportunity to have all of you here. Number 2 I would like a special thanks to Susan for the wonderful presentation. I don't know if she's still there, but it also leads me to the third. I also want to thank her for using Dixon's name 117 times. We know that he's going to be happy until the next Chiganiro, which is next Saturday. And we are really glad for the wonderful presentation. Yeah, that is all.
Thank you, Bruce.
Thank you so much.
Yeah, but next time you can also get some
maybe
like
members before
and that-
you leave. Let me also take this opportunity, since they mentioned on the passports, that you log on the www.passports.go.ug and don't wait for the deadline of next year, 2022, Feb 22nd, April 22nd, because you know the stampede that comes with the deadlines. So if you can kindly undertake this at time of the COVID LAR, so that you apply and you get this passport issue out of the way. The airlines, you know, as you look for visas, the visa regimes respect 6-month validity. So if your passport is not 6 months valid, and we are entering that phase now, since we are in August, so the deadline has entered that phase. So kindly renew your passport and have it out of the way. I thank you, OBs. And Susan, maybe you give Susan a honorary title for OB of UNTARE, so I don't know. So the organizers, you can look at that if you want your names to be mentioned many times. Thank you, OBs.
Yeah, I think Dixon will work on that. Thank you so much, Afandi.
The session is open, guys. So
Yeah, those who are not in any group of NSOBA, please feel free to contact anyone. There is a group that still has some space.
Alvin, what are you saying? Alvin, you've been quiet throughout the whole session. And I think this is my Alvin now.
Dixon, are we in Chiganiro time now?
Yes, we are. I announced we are.
Afande Johnson, good evening.
Good evening.
Okay, me in particular, I applied for the passports and went through the whole process online and even paid. But I would admit that I delayed to go and pick my passport on the appointment day, and then we entered this lockdown. What is my remedy?
So, people, do you want to raise questions, or I answer one by one? Maybe
one by one.
Dixon will guide
as
me.
and when they come in, just answer. No worries.
Okay. For Mark, most members have my contact here. Mark, if I don't know whether I still have that slip that we gave you. If you have it, take
Yes, I
a
have it
shot
on my...
of it, give it to me. Yeah, send it to me in box on Monday on WhatsApp, and then I'll check where the passport status, and then you can come and pick it. Or I can even,
thank you very
depending
much.
on where you are. Yeah, yeah.
Thank you very much.
That should be very easy. Thank you.
Thank you, sir. Dixon Nakurema. Thank you, Afandi. I'll send
Actually, Milton, you've been quiet.
I'm very quiet, but I'm listening.
And I like that background.
Yeah, thanks so much. The discussions were very, very enticing. I could not start talking or even querying anybody because everything was clear. They made Susan explain most of the things. The other members also explained. And when I am concentrating, normally I don't talk, But now that it's Chiganero, then I can join and also be on the line for applying for the passport, because it seems mine is even almost expiring.
But Arch Milton, you went and attacked my Rwambara with CM without telling me. How could you do that?
I thought after doing it, then you would come and then you come and we share. At the moment, I'm actually in Mbarara. So if you are nearby, you better come and we enjoy together.
I'm back in the city, but I saw CM right next to my village there.
Yeah, it is there. And I can invite all members. You can always, by the way, in where you find CM, even in Kampala, we put something for NSOBA. There are some corporate rates for NSOBA. The hotel always has standard rates. Then for NSOBA, if you want some good rates, we have a password called NSOBA. You just go and you mention on the counter that you are NSOBA. You will be surprised at the rates we chose. I start with a few members. We decided to give you the lowest discount you cannot find in the country of a hotel of that standard.
So I'm sure the guys
So
are
you make a
listening.
choice. Yeah, just mention the word NSOBA.
What's the name of the hotel again?
CM Hotel is in Kampala, that is Kasam Militu Hotel. There is a Kasam Militu Hotel in Ntinda, which is near Capital Shoppers.
Okay.
When you go there, you ask for the rates without having to tell you, to mention anything about yourself. After they have given you everything, you tell them that you have a password in NSOBA. You'll be surprised because we actually made it as low as 20% of the standard rates. So you can't fail to stay. Wherever
Where
you
is
are
it
and you find CM.
Where is it in Rwampara? Rwampara is big.
Rwampara, you know where the district headquarters has been put? That's Chinoni.
Chinoni.
A place called Chinoni,
Chinoni.
the center.
Yes.
There is a football pitch opposite the football pitch in Chinoni.
Oh.
Just at the Rwampara district headquarters, you can just walk straight. It's on the highway. It is the only restored building on that highway. Yes. Please.
Okay, I'll be on the lookout when I'm driving on that road.
So for you guys who are
When
used
you
to
are
driving 40
driving, just have
kilometers
a
away,
stopover.
you guys are used to driving 40 kilometers away for your things. Rwampara is just 22, so no excuse.
Yeah, actually, now that I have been there, I got information which was so interesting that many people from Mbarara prefer to do that because it's a little bit quiet, and we offer the cleanest facility in the Mbarara or the Mbarara region. So when you go there, just check for cleanliness. If you find trouble, you can just give me a call, and I wonder how it will happen.
I can confirm that cleanliness. But you're stealing the show. Arch, you're stealing the show.
Thanks so much for giving us that chance. At least when we are interacting, I have at least given you what appreciation I give to NTARE school. 20% of the standard rate is an appreciation. When you go there, you believe it.
Thank you. Thank you, Arch.
It won't be on beer or food because of the challenges of that. But accommodation, you are sure that you will sleep as soon as you reach it, whether you have money or no money.
Wilfred Tembo, you need to give us opportunities in the Queen Elizabeth, especially. Tembo, you seem to be very quiet tonight. Yet you have opportunities in UA and yeah.
Yes, Dixon, how are you? Good evening, everybody.
Good evening, Tembo.
Yeah, now I'm in Kasese, and between Monday this week and Friday, I've been scanning for a few opportunities in tourism, and there's lots and lots of land on sale alongside the Kasese Mbarara Road, specifically between Muhocha Lime Works and the Kazinga Channel, and then slightly across on the Rubirizi side. An acre of land ranges between 10 million and 15 Uganda shillings with the land title. The other opportunity is on the slopes of Mount Rwenzori. If you drive from Kasese or Fort Portal Road, there's where we have the transformers interconnecting between UEB and the local hydros. And then you drive about 13 kilometers.
It's called a substation.
Substations, yes, Mark, thank you. So up to a village called Nyakalengijo, there are also a few chunks of land if you want to put up a facility for the people who are hiking the Rwenzoris. So please, this is the best time to buy land because incidentally, I realized that people are selling lots and lots of land. 1 acre, 5 acre, 10 acres. And somehow there's now a tendency of people holding land. He buys and leaves it there so that he can sell it later. So those are the two opportunities, especially with regard to investments in tourism. On Wednesday, I was at the Kazinga Channel for about 3 hours, just idling around to observe. Noticed that the Bazungu are back. There are very many crisscrossing from Fort Portal, crossing the channel towards Bunagana and Ishasha. You know, the traffic is already appreciable. So tourism is actually back. If I talk about the international travelers, but also along the Kazinga Channel, we've noticed a lot of boat rides for local tourists from the city that come and have their weekends in this part of town and country. Yeah, so those are my few remarks about investment opportunities in tourism.
Thank you, Tembo. And maybe you could have left out the fact that the Wildlife Authority has opened up for also big opportunities in the national parks. I think all the national parks, they are up for grabs, including the taking up existing UA facilities at the Queen Elizabeth, in Kidepo, and the Makshon Falls. So the other opportunities from UA, I saw an advert. I think actually it was shared by you. They're also there.
Yes, thank you, Dixon. Actually, for Queen Elizabeth particularly, they want concessions for somebody to come and manage the equator line at Chikorongo. They just want ideas the road has been repaired and looking very interesting. So they want somebody to come and manage that place. The second opportunity is the management of the Queen's Pavilion. As you drive on Barara Road, you will see where the current Queen stood in 1954, as they communicated to her that she has been made a queen. So there's a pavilion where you have all the central information about the park. And some few years back, there used to be a very nice coffee shop. Then there are also two opportunities at Mwea. One for the students' hostel, and the second one for what they call Tembo Restaurant, which also has, I think, 20 rooms. So those are specific for Queen Elizabeth National Park. But other parks have also got their specifics elsewhere. So if you have a company and you are interested in bidding for these concessions, this is the time really to apply and see how you can manage and make some money as you promote tourism in Uganda.
Thank you, Tembo.
Good.
Thank you, Tembo, for that free advert on behalf of government of Uganda. Any other, we're still open maybe for another 10 minutes. Any other communication from anyone?
So is the Tembo still in the West? Is he still in the Kasese?
Yeah, he
Yes,
said
I'm
he's
in
there.
Kasese.
You are still in Kasese? Okay, we
Yes,
shall
I'm
talk
here.
since I'm in Barara.
I'm here up to Tuesday.
Okay.
Okay.
Good.
Thank you.
Good. BBR, are you saying anything? BBR, there are no issues in taxation. You must be having some new things to tell us where taxation. Alan, when is the third wave arriving in Uganda?
You want it to come?
Ask him. Does he want it to come?
We should pray does not come, but yeah, we are just preparing for any eventuality. And yeah, this thing is really confusing us. We don't know how it comes in and goes, but we continue to prepare. Let's just be on our guards. The basic principles haven't changed, and we just hope that the government scales up vaccination, which it's doing, such that we get everything under control. But so far so good. Just keep the SOPs and all the different. I'm sure most of you here have got your jabs, and yeah, so it will just prevent you from severe disease, but definitely it will not prevent you from getting the disease.
Okay, thank you, Alan. I think Mzee has begun his speech. We need to catch up with him. Thanks, guys. We're going to close right now. And later in the night, we're going to share the recordings and the PowerPoint presentations. Thank you.
All right, thanks. And thanks for today. It was quite nice.
Good, thank you.
Bye.
Meet next weekend.